I'll just begin with my introduction first, and then when we get to the point where we're going to start the analysis, I'll take a look at some of the questions that you guys have, and then we'll go through the pairs that are more relevant to you guys. So my name is Sherman. I'm the R&D lead for Zeta Labs. This live session is a collaboration between Vantage and Zeta Labs, and basically we do this twice a week, and we look at different pairs and try to come up with some setups for the London and New York session. Okay, so before I begin, I just want to put out this disclaimer that trading any sort of derivatives contain significant risk, and do ensure that whatever that we're going through today is in line with your own trading objectives. And that being said, do feel free to reach out to any advice you can receive, or you can actually reach out to us to discuss any of the trading strategies and see if that's in alignment with what we are going to go through today. Okay. We used to do key economic events, but I think right now, because of the short amount of time that we have, we're just going to go straight into the trading ideas, and then I'll leave the last part for Q&A. Previously, we always do DXY, which is basically the dollar index, and then if we have time, we'll do the euro dollar as well as the gold. But I think my focus today would be on gold, and then I'm just going to do one of the indices, which probably is going to be the S&P 500. Okay. So I'm just going to bring up the TradingView. So TradingView, the tool that we're using today is TradingView. You can actually download this desktop app on tradingview.com. It's a free tool that allows you to look at different instruments across Forex, crypto, as well as your equities. Okay, I'm just going to go through some of the indicators that I'm using so that we can familiarize ourselves with them before I dive into the analysis. Okay, so we're not going to use anything too fanciful. So two things that we're going to use in particular. One is the pivot points. Pivot points are basically lines or support and resistance lines that we can actually, that is basically drawn for us at the start of each trading day to tell us the extremes of what happened yesterday based on yesterday's data points, and basically those data points are projected to the market structure for today. Okay, I'll go through a little bit more on how we can use the pivot lines later, but keep in mind that's the first indicator that we're using. The second one that we are using is the Smart Money Concepts indicator that is basically created by LuxAlgo. If you are a fan of the Smart Money Concepts, basically what it does is that it highlights certain key areas where it coincides with certain resistance and certain support levels, and those two, basically the SMC indicator together with your pivot points, will give you a clear indication of what's the current trading range and what we can actually do for the current day. Okay, this is not usually used, but I would highly recommend using this zigzag indicator as well. A zigzag indicator basically highlights the impulses and the retracements that we see on a particular time frame. So, for example, at this point in time, we are looking at this impulse towards the upside, and then a potential entry would be the retracement. And along the way, there'll be tools that they'll be using to draw certain levels. One of it would be the Fibonacci tool to determine what would be the retracement level that we can identify to enter a potential entry. Okay, so the first pair that I'm going through is the gold pair, and basically what we need to take note of is that the gold pair XAU USD is heavily influenced by a lot of fundamental news this week. So later in about, let's say about 6 hours time, there's another news event that will affect the move on gold. Basically, that's the NFP, the non-farm payroll. Because gold is basically paired with dollar, so any news that's affecting the dollar will also affect this this pair. So what we have seen, usually when we do the analysis, we do from a high time frame down to the low time frame. So using the pivots, right, as you adjust the time frame, the pivots will adjust upwards. So on a daily time frame, pivots will automatically change to the monthly pivot. So I'm going to briefly talk about the pivot points and identify the key areas which we should take note of. Okay, the pivot points are actually basically 12 lines drawn based on the data points that we get from the previous periods, open, high, low, and close. So for the monthly pivot, we are looking at previous months open, high, low, and close to derive these 12 points. How we define these 12 points, that's not important, but we what is important is to identify the key level, which is the pivot point. That's the middle, right? And then there'll be 3 key points, two resistance lines above and 2 support lines below. And in between all of these lines are basically the middle points. Okay, middle points are actually entry points, and the resistance and the support levels are basically the reversal points. Okay, so how we usually use these points is that if, say for example, in the previous month, let's look at the previous 2 months. Okay, in the previous month, the idea is that if the close of the close of the low of the previous month is below the support level, right? Then basically this month will be a bearish month. It will continue the bearish movement downwards. And if it goes above the M3 level, right, then basically it signifies a bullish move. Okay, and it's important to note that if all of these lines basically forms the market structure. So if you were to look at, say, for example, this since December to February, coincidentally, right, this diagonal support line coincides with the M2. So why is M2 a significant level for the month of February? Is that once price level falls below M2, then we move from a bullish impulse to a bearish move. And there is where we sort of look for the retracement and then look for the bearish move downwards. Okay, so given that introduction to the pivot lines, right, based on the February's move, we fell below M3. So the retracement points for this month, right, is the M3 level. Okay, so basically what I'll usually do is I'll take the highest point from the previous month. If price have not touched the M3, basically we can just join it towards the start of M3. And this will basically form an arbitrary diagonal resistance line for us. And because previous month is bearish, we are looking to sell at these 2 key levels. So the pivot point and the M3 level. Okay. So how do we couple this analysis with our SMC concepts, right? So we have to go down to the low time frame. Now that we know that our general direction for this month is bearish, right? And again, since we're at this level, right? Price have to push up to the pivot point and M3 for our first initial sell. Okay. So what happens if price does not push to pivot or the M3 level? The expectation is that price will need to push below M2 to confirm the downside movement, and then it will retrace back to M2, and then we'll take the second entry at the M2 level. Okay, so far, any questions? If you have any questions, just feel free to put it in the webinar chat. I'm going through this a little bit quickly. A lot of these concepts are mentioned in our educational series. So if you want to know more about it, you can join us on those webinars as well. Okay, so on the daily time frame, we're looking at a bearish move downwards, right? So if you go down towards the lower time frame, So now that we know that the high time frame is a bearish move, we need to sort of think of how we can actually, is that high time frame move a valid move, right? So what do I mean by that, right? So we do know that prices move will oscillate between a demand zone to a supply zone, and then down to a demand zone. And the next move that it goes will be towards the supply zone again. Supply zones are basically the resistance zone again, right? So these two lines that I've just drawn out earlier are basically the targets that we are trying to target as a selling point. And why do I say that these are good selling levels? Because anything above these two levels, we are sure that it is going to be a bullish move. And for us to actually recover ourselves, it'll be much easier. So for example, if let's say price were to, so first case scenario, it goes up here, goes and then bounce back down. Second scenario, it goes up here and then bounce back down. Third scenario, for the worst case scenario would be the bullish move, which is it'll move up beyond this level. But the idea is that in most cases, a high percentage of it would, the price will actually fall back to this level before it bounces even higher, or retrace back to this level before it bounces back higher. So if you were to sell at this point, these 2 points, you can actually enter the third point to actually average out your sales and close out at break even or close out at a profit at these 2 key levels. Again, these 2 key levels, right now they are acting as a resistance, but once prices break above these 2 levels, these 2 levels will be useful as support levels. Okay. So back to the pivot points. See, false, it coincides clearly with the SMC. So as we go down to the 1 hour, the pivot points automatically changes to the daily pivot. And again, to reiterate the points, price action is fractal in nature. So basically what we see, the patterns that we see on the 4-hour time frame, it will form the same patterns on the 1 hour, and then whatever patterns that we see on the 1 hour will actually be the same as what we see on the 5 minutes, so on and so forth. So as we look at the previous day's movement, it broke above the M3R1 level. So today's goal is to be bullish. Okay, so you might be a bit confused. On the high time frame, we are bearish, but on the lower time frame, we are bullish, right? We will need the lower time frame to be bullish for us to be bearish on the higher time frame. So it kind of makes sense if you were to do your analysis from a top-down approach, right? So you only want to sell at these 2 levels, and for you to get to these 2 levels, you have to be bullish today, right? And based on this price movement, because of we can even confirm this support held, right? And all of these candles here represents large buy bullish moves or large demand coming in for gold, right? So the tendency for a move downwards here will be of low probability as compared to the price to move up towards this key supply level. Okay, one thing about gold that we need to take note of is that today there's a high key event, which is the NFP, right? The other high key event that we need to take note of is CPI, which is going to happen next Tuesday, right? So if you put yourself in the shoes of a seller, right? Most sellers will try to enter at this level, right? Some will say, oh, there is some sort of a fair value gap on the 4 hours, right? There were a group of buyers here, and then basically the sellers came in, and then the sellers were not able, the buyers were not able to enter any positions. So once it enters this region, there'll be a lot of buy orders being filled, right? So some of them might say, okay, let's take it to this point and then break it down again. But of course, if you are a strong seller and you know that CPI is coming up next Tuesday, the key idea will be to push past this. That means clear out all the buyers in this clear out all the sellers in this area, right? Push prices above to your high time frame resistance zone, right? And then that's where you get a better price to sell, and then you push the price down even lower for CPI. And when we look at the fundamentals, does that coincide with this move, right? Based on yesterday's employment change data, people are guessing that NFP is going to be worse than expected tomorrow. And if that's the case, then dollar will weaken, which will confirm this bullish move upwards, right? And what will cause the price to move down next week would be that CPI prints a higher value. And again, this scenario is what I call the max pain scenario. So sellers get caught here, right? Sellers becomes buyer and then push prices up here, and they're expecting to push even higher, and then the new sellers will come in to break them down into a new low. Okay, and I think the Tuesday's CPI data, the previous Tuesday's testimony by the Federal Reserve Chairman did indicate that the economy is not, as in they are willing to increase the interest rates even higher to curb inflation. So this plays out nicely for the announcement that we have this week. Yep. So the next one that I'll be looking at is the indices. So a lot of these pairs that I'm looking at are basically dollar dependent, right? So a lot of these moves are caused by news on dollar. So that would be the same thing as for indices. I'm going to go US 100. Okay, US 100, US 330, US 500, they are roughly the same. US 100. They're probably going to be the same sort of price movement, right? Huge sell down from the announcement, right? Huge sell down from the announcement. The Russell 2000 is also down by a lot, and then Dow Jones is also down a lot. So you will see kind of like the same kind of price action for all pairs. Let's go through maybe US 100 since that was mentioned. One key thing that you can actually see from the difference between the different indices is that this did not have a drastic sell-off as compared to the rest. So what I mean by that is that there's a breakout, and then there's this nice support region here. Whereas if you compare to US 500, which basically are the tech companies, right? They broke below that previous support. And in the SMC concept, when you have this change of character, a change of character is a green one means that it's bullish, right? Towards the upside, and you want to buy on the retracement, and then the red one is basically a bearish move to the downside. So a lot of these moves are made based on sentiments, and you can see that a higher high into a lower low shows a very strong downward movement. And you can pull up any indicators, and you can see that even for like, if you want to use something like a RSI, right? For an RSI, basically it will paint the same picture. It formed a lower low, right? So so for example, this move versus this move, and this move versus this move, right? So this versus this versus this. And basically RSI, any oscillator, RSI, stochastics, they're all measuring your momentum, right? And the greater the momentum, the stronger the trend. Okay, so all of this US 500, US 30, US 2000, they are all in a very strong downward trend. Okay, look at US 100. This is slightly different, right? Because you have this support level here. So in most cases, of course, we want to buy up this this level. So one thing that we usually use is the Fibonacci retracement to test that impulse. And basically we have certain levels, 618 and 782, which are the levels that we look at. for the retracement. So say for example, not right now, it has already broken the 618 level, and it's right now consolidating at 782. Okay, so if it forms a 100% move, that means it moves up and then it moves 100% down to this level. This is a very strong bearish move, right? The likelihood is that it will form some sort of second shoulder, right? With weaker upward momentum, and then at a higher price, those guys who were buying at the top and have averaged out their prices will start to sell here, and then we'll push the price down even further. So if you are bullish on US 100, what we would expect, right, is to break a few resistance level. So this is a clear resistance level that was formed in the last 2 days, right? There was a huge downward move, and then I think yesterday there was the employment change data, and then it caused this break towards the downside. What we want to see is that if you want it to be a bullish move, it has to retrace 100%. So like what I said, if it's 100% move up and then 100% retracement down, this is a bearish move. Similarly, if it's this move down is matched with a 100% move up, then this is a bullish move. So the only bullish move right now is that it has to go back up to this level to determine that bullish move. And what happens is that either it breaks above, retests, and move up again, or it comes back down to form the inverted head and shoulder, right? So anyone who was selling here, they'll start selling. And as price comes down, hopefully to the 50%, all of these sellers are out of the market. And when they're out of the market, they push the price up, right? When sellers get out of the market, they create a lot of buy orders. When a lot of the buy orders get out of the market, they create a lot of sell orders. So this phenomenon, this V-shaped phenomenon, is due to the fact that you have to infer whether or not it is buyers getting out of the market or new sellers coming into the market. Okay. So that's kind of like the concept here. So anything else, any other price movement, if it's not 100% move tonight, right? If it's not 100% move tonight, it is a bearish move, right? If it comes up this level, it's a bearish move. If it falls below this level, it's a bearish move. So if it comes up to this level and it bounces back up, you're looking for a lower high to enter. Otherwise, if it falls below this blue, the previous support, then it's a sell. So no matter what, it's like all the odds are against a bullish move. So if you have buy positions here, it's a bit risky, right? You would want to, and if you are a seller, you want to wait for a retracement either back up to this level. First level is first level confirmation, or wait for price to break below and then retest and sell again. And of course, this is just the idea for today, right? So if next week it prints a different pattern, then there'll be a different analysis for it. Okay, let me just go through the next one, which is Europe, right? Yep, so same thing. Slightly better than what we're seeing in the US market, right? We have broken the 618, 782 looks like a nice week, right? So the only bullish move currently is that it has to come down to this level, bounce up, form a higher low, and then we buy at the higher low. Anything else up here, down 100%, right? Inverted and then goes down again, or breaks below, retest, goes down again. Yep. So that's kind of the same for almost every and again, I think what is different between this index versus the S&P 500 is that there is a chance to form a double top here. All right, there's a chance to form a double top here. if you follow like the SMC concepts, whenever you form some sort of like a equal high, when I say equal high, something like that, right? Equal high before a major supply level, there are a lot of buy stops here. Buy stops as in sellers with stop losses, right? Or a lot of buy orders above for breakout orders, right? So if prices were to be able to, so for a bullish move, the price cannot take out the demand here. If they take out all of the demand here, then it's basically a bearish move, right? What we want to see is a bullish move from the demand zone, which is where we are right now. A bullish move from the demand zone, and we want to tap above this level. And once we tap above this level, we can see a spike up to the major supply zone. And usually when we see such a pattern, then for a bullish move, we want it to break above this supply zone will become our new demand zone and wait for price to retrace and then moves up higher. Or it goes up, it breaks below the previous supply zone, right? Creates a new supply zone here, and then basically we'll wait for a retest and then comes down. If it's a true reversal, all right, true reversals are always takes a long time to happen. So you will have plenty of opportunities to enter at lower highs for yourselves. Okay, if it's just up and then down, that's not true reversal. Like market participants need some time to change from buys to sellers. Yep. With that, I think that's about it. You guys have any other pairs that you want to go through? Largely a lot of fundamentals at play this week and next. You have all of this data showing everyone is high in debt, so that's somehow going to be a problem down the road, and we're heading into a recession, highly likely heading into a recession. So any indices that we talked about, the bias should be towards the downside. If you follow the politicians who are in control of the policies in the US, you can see that a lot of them are starting to sell their holdings. So that's kind of like a confirmation that they know something's coming up. Okay. Yeah, I think with that, if you guys do not have any other questions, I hope this was a useful session for you guys. We are doing this twice a week, so I'll see you guys again next week. Okay, all right. Thank you guys.